Okay, very good morning. Let's get the briefing underway. Tuesday the 21st of February. First thing, looking at the charts this morning, it's been fairly quiet in terms of the equity market open. Fixed income bunds pretty flat, just around 4 ticks lower. The more notable mover, obviously in the forex markets, seeing some dollar strength that was apparent from overnight. And that's consequently weighing on both major pairs since really Europe's come in. Some underperformance in the euro currency compared to the pound. Euro dollar, I'd just be a little bit mindful as well with your respective pivot levels, and certainly in terms of the equity markets and so on, given the fact that there was a US market holiday yesterday which throws those out. But euro dollar under some pressure, breaking through the kind of overnight Asia pack lows this morning, seeing a bit of an acceleration of that move to the downside amidst some of this dollar strength. The pound, though, holding up to some degree. Nothing really concrete behind why there'd be a bit of a divergence. Maybe it's just the fact that with Europe, some things we're going to discuss shortly, there's obviously a bit of heightened political risk around France yesterday, which saw some movement in the yield spread comparative to in the UK, where you could argue there's at least a degree, if you like, of clarity in some respects, given that not really anyone's looking for any real major issues to come out of the upper house hearing in regards to the government's ability to trigger Article 50, which is obviously ongoing as well today. Quick look at why the dollar is stronger. Most of the articles that you're probably reading is talking about comments out of a Federal Reserve policymaker, and the person in question being Patrick Harker, who's the head or president of the Philadelphia Fed. Comment specifically was that March hike is not off the table. Now, I think that comment really isn't too different from sort of, maybe it's just erring on the side of a bit more definitive, addressing March directly, but we've already had the odds of March increase last week. Maybe just the fact that the market's fairly quiet overnight, the US still really yet to fully come back into the market. This, of course, they're kind of talking in a more hawkish angle comparative to overall political nervousness that seems to be slowly ratcheting up in regard to the Eurozone, despite some of the good economic data that we've seen this morning in the likes of the German, French services manufacturing PMIs. One of the things here then, a chart you can see, is the performance of the dollar overnight against its kind of Asian peers overall, the yen, Kiwi dollar, and then the euro. So it's pretty self-explanatory really when you're looking at your charts this morning. I can see as I'm talking, euro is still under a bit of pressure here. Harker then specifically says, I don't think that we're behind the curve right now, and that a rate move next month is not off the table at this point. So again, pretty punchy comments, but not too dissimilar, as I said, from what we've heard before, which makes me a little bit reticent to sort of buy into this dollar move too much. But arguably, even though that's where my fundamental view lies, at the end of the day, I can't fight the movement that's happening, and the trend definitely this morning is dollar strength. And so I think just play that accordingly for the time being. The other thing, of course, is talking about some corporate earnings that have come out. But before we get to that, let's just have a quick look at France, because there's been some quite interesting things that have come out. Most recently, we've just had a bit of economic data on the service front, particularly strong. Ooh la la, being run by the Fast FT this morning. French service industry much healthier than expected. That kind of being replicated as well. The German manufacturing PMI 57, a point higher than expected. The service PMI also stronger. So good economic data, and yet the euro is coming under pressure. Now, a lot of this is, I think, to do with the fact that it's more, again, as we know, these economic data points have been fairly robust, or at least on a recovery fashion. Nothing mind-blowing, but certainly a bit of momentum to the upside. But it's the politics that people are fretting about more in this current environment. Now, a chart I saw this morning that have a quick chat about is kind of Something which drew a bit of attention yesterday because there was an opinion way poll in France revealed that support for Le Pen in the first round of the presidential election has crept up by 1% to 27%, with support for Macron and Fillon unchanged at 20%. Deutsche Bank noting that more significantly, though, the second round polling revealed that Macron would defeat Le Pen by a score of 58 versus 42, a tighter margin than the 60% versus 40% in the results from the same pollster just 4 days ago. So it is narrowing slightly, and what you're looking at here is a graph where we have bookmaker implied odds for a French presidential election. Now, don't get me wrong, bookmaker odds are to be taken with a bit of a pinch of salt. You remember what the bookmaker odds were for Brexit, pretty much 90-10 that we would remain. We all know how that fared, and the bookmakers got a big hit on the back of that, getting it so wrong. But bookmaker implied odds for the French election, what's interesting here really is the dotted line. And what this dotted line is basically showing you is between really the last month, so we're looking at the 20th of Jan all the way up to the 20th of Feb, you've had a convergence, if you like, of the range between the candidates has closed considerably. You can see we've gone from almost 65 down to about 7-8 compared to where we were. You know, the wide, if you look at Fillon about a month ago, kind of, I guess this would have been pre-scandal, if you like, was way ahead of the pack. But then as soon as that started to hit, you can see this really sharp fall in bookies' odds of him winning. Macron was the key kind of benefactor of that. Now Le Pen has been on a very steady, if not slow, incline. However, the poll that came out yesterday, I must stress, does not take into account the fact that Le Pen's party headquarters were raided most recently over the probe concerning whether Le Pen had used European Parliament funds to pay for fictitious jobs, a la Fillon. Similar situation, and so as such, you're kind of getting a little bit of who can avoid the negative headlines at this point. Seemingly can capture a bit more popular support, but the point being is that as we're getting closer towards the end of April for the first round and the second round early May, is that this race is getting significantly tighter in terms of how the bookies are seeing it at the moment. What has this meant for the market? Well, yesterday you probably saw this chart. This is Le Pen's popularity, which we've seen is getting a slow increase. It's causing the premium investors demanding to hold French over German 10-year debt, which is seen as the benchmark kind of duration, has hit a fresh post-Eurozone crisis high yesterday. In fact, having exceeded 0.81 percentage points for the first time since August of 2012. So you are certainly starting to get a little bit of apprehension, some investor jitters in the market about the unpredictability that we're seeing unfold with this situation at the moment. Quickly though, just going back to the chart, we are seeing the DAX just taking a phenomenal pop here on the upside. Let's just quickly have a look at that. Let me put my chart to 1 minute. Yeah, that is a explosive move you've just seen there in the DAX. Not seen anything on Twitter. This is probably, I'd say, a case of fairly thin volume, and you're just seeing a level broken, some stops triggered, exacerbated by liquidity, and you're seeing this big move on the upside here. Again, doesn't look like it's anything news-based, so I'd be a little careful chasing that move higher at this point, given there's probably no new fundamental factor. Let's not get around the fact, though, as I've just discussed, you did have the economic data this morning come out pretty solid across France and Germany. So you could argue that there are some reasons there, and if I start looking out to really the middle of last week, let's look at the 15th, probably a break there as well, just some stops triggered probably around those highs, which were coinciding with around the highs from yesterday's kind of very quiet, confined session, influenced by the fact that US participants were out the market. So maybe combination of those levels being taken out. You can see that wick already pulling back fairly aggressively on that pop, which to me signifies that that's just some stops run on that move as well. Euro though remains under pressure. You know, this could be, I mean, I don't want to look too much into it in terms of euro weakness, but the other thing you get as well, obviously the weaker the euro gets, there is that kind of feed through effect for the German export names who do benefit from a weaker euro. This has obviously sparked likes of Trump, even Merkel, to talk about her concerns about a low euro. But the lower this goes, does this add to some of the competitiveness of countries like Germany? That might be another way to look at this. Some of this move that's occurring this morning. Interesting thing though, despite the DAX spike, the Bund's not really seeing too much movement, albeit just coming under, you know, a kind of grind lower, if you like. Okay, quick look at some other news flow and some headlines to be aware of from this morning. Obviously, I know the markets are moving, so I'll try and wrap this up quickly. But HSBC this morning, it's one of the headline kind of bellwether bank stocks, certainly in the FTSE. They've missed profit estimates on a revenue drop. They've deepened their cost cuts. They said that they're to purchase $1 billion of stock in the first half of 2017. Their shares down significantly this morning. That's probably providing the main headwind for the FTSE comparative to its European peers on an individual indice breakdown. On the flip side though, some reprieve coming from the mining sector. BHP Billiton's first half profits soaring on price rally and has beaten estimates. BHP Billiton, of course, the world's biggest mining company, their profits surging on commodity prices moving higher on increased demand from China, signalling growing confidence in the rally with a better than expected dividend and a bond buyback. If I look at the kind of performance of the indices this morning, just looking at the FTSE, you know, the actual cash indices are pretty flat overall, just minor negative. If I click on the FTSE, which is down about 0.3%, looking at the gainers and losers, Intercontinental, they're the top gainer in the FTSE this morning. They had an earnings report where they were very solid. Highest annual profits, or they reported higher annual profits, and a boon for investors in the form of a special dividend. You can see here BHP Billiton, so that's lifted associated names like Anglo-American, Antofagasta, which are all leading the way. On the flip side though, you can see here HSBC is down 6%. So that's a significant move for a company that's one of the biggest index weighted stocks, which, as you can see, probably if I bring across quickly the CFD FTSE, although the DAX you can see as the futures was spiking up, you've kind of got the flip reverse here, and the FTSE's coming under pressure. This is why it's always beneficial to know when these bigger, larger market cap equities are reporting in the UK and Europe. So just looking here, FTSE on top left above my DAX chart, there's a divergence there for this morning, inspired by that difference in the corporate earnings weighing on the UK major index. Quick look then at the calendar and what's to come for today's session. Obviously volumes are going to pick up later as the US start to come back in, so business as usual in terms of stateside. You've then got coming up at 9 o'clock, we're looking out for the final Eurozone manufacturing service PMIs. Keep in mind that these are likely to just ratify what we've seen out of Germany and France, which generally are showing an improving picture. You then get borrowing numbers coming out of the UK. Now typically the borrowing numbers out of the UK are not really that much of a factor. However, if I remember correctly, the last print that we had a month ago, because I remember I did a retrader game for it, saw some aggressive selling in the pound shortly after the data hit, because UK net borrowing I think was its lowest since around 2015 I think it was, and you had the largest sellers, or the largest amount of selling from foreign investors of gilts since immediately after the EU referendum, which is probably showing some concern from foreign funds investing in the UK heading in towards the triggering of Article 50. It would be interesting to see those borrowing numbers actually today. I would be watching those with some interest if I was trading sterling currency. Then you've got the manufacturing PMI to come out of the US later on this afternoon. Speaker-wise, quite a few things here to just be mindful of. Bank of England's Governor Mark Carney testifies at the Treasury Select Committee. This is probably a conversation then with Treasury officials about the quarterly inflation report. As such, normally does not offer too much in the way of new information in regards to his view on the economy or monetary policy. Certainly keep an ear out though for any comments in a Q&A style that he has to say on the inflation side of things. Fed-wise, following the kind of reaction that you've seen of dollar strength to Harker, putting March distinctly on the table as a viable option for the Fed. Harker speaks again later after European cash close. We got Fed's Kashkari as well, who's a voter, speaking in an interim period just ahead of 2 p.m. this afternoon. So that's pretty much your schedule for today. Just having a look, Euro then still under some pressure here. Sterling wise as well, you've kind of got that big sell-off here that we had in cable and that really disappointing retail sales report on Friday. Downside there, you've got the initial kind of knee-jerk reaction on the data and then that support level which came in that evening before we rallied back up. That comes in just above the 124 handle, and then that low point of just sub the figure also kind of tallying up with around the lows that we had midweek on the 15th last week in cable, so probably be keeping an eye around there on the downside. Equity markets, despite the underperformance in the FTSE, still generally speaking feel more, don't see anything really to change the view of being more kind of bullish for US equities, indeed up at around still elevated all-time record high levels. As I said, probably not looking at these pivot levels too closely, given the lack of trade yesterday affecting probably those price points. But nonetheless, it's kind of looking at where would be potentially the best point of entry to get back in long again in terms of this equity move, is what I'd probably be more interested in as we get into the crux of the US session later. Crude, meanwhile, still setting slight positive. That's been a pretty nice trend really since the second half of last week and continues to etch up. Nothing really too new going on there, and obviously with the crude oil inventory numbers, just remember because of the President's Day holiday on Monday, the API inventory numbers will not be tonight, they'll be tomorrow night, with the DOEs delayed and released on Thursday to account for that market holiday. Okay guys, going to leave it at that. So have a good session and I'll see you in the chat room later. Thank you.